Good to have you back on the show talking markets here.
Yes, sir.
Stocks are flat. They're not making big moves in either direction, it seems right now, except for the Dow, which continues to take a little bit of a beating here after yesterday's sell-off. The Russell kind of flat still, not making too much of a move. The VIX up just 1%. Dollar index is moving higher here today. What are you looking at today?
Yes, I did a pretty thorough review in the currency land this morning, and I did take a fresh position on New Zealand dollar short. I'm still long dollar CAD, still long dollar Swiss. Aussie dollar, interesting move. Interesting data.
Mm,
Pound and Aussie hold rates, right? Pound still at 5.25. Aussie's at 4.35. Inflation data for both countries came in slightly higher than expected. So if you look at the Aussie overnight, the Aussie was the strongest currency pair overnight. It's faded a little bit, but the dollar's been stronger. But that CPI data came in 4%. By the way, did you expect to see the UK less inflation at this point than the US? It wasn't. It was last year when they were 11%, and they're like, the UK is in trouble. It's going to be recession. They're down to 2% year over year. Look at
yeah.
us. We're 3.2, 3.4.
Yeah,
So
exactly. And look at there. There's a visual to what you were saying there. You had
yeah,
inflation. Here we were midsummer of,
2022,
July,
right? Yeah.
September 2022. U.S. was starting to see inflation come down. Meanwhile, inflation kept climbing for the UK. And
Mhm.
as you're pointing out, not only did that UK inflation start to roll over and follow suit, where we paused, the
Yes.
UK has continued, and you can
Yes.
see in green that this is the inflation for the UK, blue is the US. And as you're mentioning, inflation is at their 2% target. So
hmm
I think it's only a matter of time that they look to cut rates next, right?
You would think so, and I also wonder is like, do they just have more responsible consumers than we do? I feel like our consumerism was kind of sustained, higher prices, and we're just continuing to spend. And it always cracks me up when it's like, stimulus money, stimulus money. It's like, what are you talking about? I mean, everybody got a check for what, $600 in 2020.
Yeah.
It's like I didn't think $600 could stretch most people 4 years. That's just me.
That's
Um,
not in today's world, no.
right.
For 4
So I mean,
years?
yeah, I mean, well, if I live it on the street, maybe $600 I could stretch it, dollar for dollar, but
Right.
I would think not. So, but I thought it was interesting. I mean, the numbers are coming in, so it's ticking up higher with so CPI data that came in. I was just looking at this calendar last week, so we had CPI year over year on the 19th. So last week came in
Yep.
right at 2%. That's what caught my eye, and then this week the Aussie jump overnight. CPI year over year forecast at 3.8 came in 4.0. So Aussie, maybe holding firm at 4.25%. So we're still looking at that whole monetary policy divergence situation. But let's just talk charts, talk technicals. DXY is 105.60 was my resistance level that we are breaking. Now it's not super convincing, but is enough so that I am now looking to get long if the technicals look good. So my short euro dollar is looking better. My New Zealand dollar I took fresh today. My dollar CAD turning. My dollar Swiss is fine. Dollar yen also another one that is where above 160.
Mhm.
One thing I want to note on the dollar yen for the weekly time frame is if we are going to breach 160. Somebody asked me this morning in my trading room. I like your thoughts on this, Nick. Do you think that 165 or 170 is a better probability or higher probability than a full-on reversal back to, let's say, well, even here, even if we pull back to 152, do we go to 165, 170 before we hit 152? Thoughts? I mean, it's an intervention trade at this point. Like, I don't think the Japanese yen just strengthens on its own. There's going to have to be something that breaks for the JPY to really rip back all the weakness it's had. My thoughts, but what do you think?
I would agree that I think that the continuation is more likely than a reversal at this time
Yep.
because, at least for now, um, the something needs to change. And I think that, I'm sure you know who Kathy Lean is from BK Forex and
Yes.
or BK Traders.
Yep.
And Kathy's made the point that something from the Bank of Japan needs to change. There needs to be something different than just a, hey, we're going to do some intervention here and some sudden buying of the yen. I think that they need something more material than that in order to get the yen off of. And I don't know what it is, but there
Yeah.
has to be something that is more, because the market has figured out that that is just putting band-aids on a huge open wound.
Hmm.
It's not doing enough for now. Now, what will change that? Probably a shift in global economics, like a shift in, if you get the labor market in the US continuing to materially come down, and then inflation falls, and then all these other central banks are cutting rates rapidly, and then Bank of Japan is not doing so.
Right.
Yeah, then you might have a case for the yen, but timing this one seems to be very tricky. I'm not quite sure where the top of this move is.
Yeah. Good luck. Good luck timing it.
Yeah.
Yeah. So I mean, and my exposure right now is not in currencies with the Japanese yen. Let me see here in my account. I did get some exposure on the FXY,
Hmm.
and I just bought a small chunk of shares. I bought it at 58.62. So let me
Okay.
do the math on that. I'm down about 90 cents. Now, can I handle 90 cents? I think I can. 90 cents down in a drawdown, when the reality is we've been down hundreds of pips in currencies.
Yep.
So
Yep.
this is why I decided, look, I'm going to dip my toe in the water with the Japanese yen for some bigger picture move. But to me, FXY ownership is better than playing options on this, is better than being in the currency market where we could have more interventions and flashes and things you can't control. So I don't want that type of exposure for my portfolio. I'm comfortable taking, I'm not going to say a sizable drawdown, but I mean, what I'm down 90 cents right now on just my first tranche. So 100 shares at 90 cents. So I'm down $100. Whoopee,
Yep.
big whoop. So way more manageable than what would be, look, even if it drops to, let's say 55 or 52, and I'm down, $500, it's totally manageable.
Yeah.
I mean, that's still less than, it's a fraction of 1% drawdown. So I'm not in a hurry on the Japanese yen. I think it's, to me, and we talked about this, last week, the week before. It's like, I know the exposure is probably early. I think Frank was actually trying to push back. He's like, "What makes you think the timing is now?" I'm like, I don't think the timing is
Sure.
now.
Sure.
But I
Yeah.
think that when the timing starts, it might be too late, or the thing's already turned, and I could see, we can see hundreds of pips that are starting to gain traction. But timing wise, if I'm going to give me a 12-month plus or minus window, I think that by the end of 2025, Japanese yen is having some type of repricing event, whatever that looks like, and whatever catalyst it is, we don't know. I don't know. But I would say if we go into 2025, plus or minus 6 to 12 months, I think if I give it a year, we could probably get that window as, like, I can catch some profits on the Japanese yen. So
Yeah.
this is my way of trading it.
And even even a kind of mild turn down in global economics could turn that into a pretty nice hedge trade if you think about it. It's
Yeah.
like if you get if you get monetary policy like we talked about last time, just kind of tanking the other direction off of a real slowdown, the yen is going to look relatively attractive, I would imagine, because again, that's going to be a rush to safety, and then the Bank of Japan, although they're dealing with struggle, maybe there's another case there. Is like the question would be, would the Swiss franc also see some strength in that? I mean, probably, but the yen would certainly have a lot of room to move if it if we get some sort of change in the wind, if you will. So
Yeah.
I don't know. We'll see. In 2022, the dollar yen skyrocketed during where the U.S. central bank was hiking rates. So if you
Mhm.
get an environment where the U.S. is cutting rates rapidly, the yen might do the opposite, right? We might see something like that.
Yeah.
So
Yeah, and I mean, I hope it's not a full-on financial crisis in order for the Japanese yen to get stronger. But at this point, I mean, when it's ripping up and pushing up and drifting up and melting up, it seems like there has to be some, like, bad situation ahead for the repricing to occur. I mean, and this goes right along with the bear camp, right? Everyone that's super bearish, everyone that's probably exhausted now by trying to be bearish. Japanese yen's the same thing. You're fighting the flow. You're swimming upstream. And so far, how's that working for you?
yeah.
Outside of an intervention that was good for, a week, it's right back where we started. And so, in fact, that was like our last trading battle. I was essentially hedged on those yen pairs, and that was how I generated profit that week for the trading battle. But I will note this. I mean, from the technical side, on the dollar yen, this high in price, drifting a little bit higher in price, I'm noticing some disagreement. If the weekly gets back into a overbought situation on the RSI, there could be some divergence there, just like we had previously. But if we have divergence, I could see we just pull back to a trend line and the market buys, and I don't want to fight this. So anyway, we can wrap it up there on the yen crosses. But I thought this week that if the dollar yen crept up to 160 and there's some type of acknowledgement, then maybe that 160 level does matter. But now that we're just kind of drifting higher, we're 50 pips above it. If this candle closes bullish above 160, I think this BOJ intervention level is no longer 160. I think we're now looking to just drift higher, and that could be another wave of weakness on the yen crosses. So I feel for any traders out there that are trying to short the yen, but you're dumb. Like, don't do it. It's not worth it. I'm sorry. It's just not worth it.
Yeah,
So I mean,
it's a tough
listen to a trader that has for years said I made more money by not trading the yen for this exact reason, because it is such a disobedient currency pair at times. When you think it lines up and it's a perfect technical trade, it doesn't care. And when it does care, you end up chasing your tail the other way, trying to catch it, and it's bull flags and bear flags, and it doesn't pull back. So it's just a super challenging, slippery currency pair that can show thousands of pips, and you're like, I got zero of it. But don't feel bad, because there's 21 other currency pairs that are really nice to trade.
Yeah, that's very true. Chris, next question for you.
Yes.
The topic of the day, as always, is the NASDAQ and NVIDIA. Love this one. I feel like I've had this conversation like once or twice before, but NVIDIA.
It's brand new this year, brand new. Nobody's talking about it.
Yeah, it's the first time ever actually that stocks get overdone. Anyways,
Right.
NVIDIA seems to be bouncing here. Seems to have found kind of a short-term, at least low at the 118 level. Is this one of these guys, Chris, or is this a breakage in the story that could actually roll over further? What do you think?
Sure.
I mean, I'll give you my opinion. I think that this might have spooked some people, and you may see some follow through. Doesn't mean I think it's going down forever, but I actually don't know that I think 118 is the low of the year by any means. Like, I think that even if we go back and retest this area, I still think for NVIDIA that we're going to get something. We're going to get something that cools off the story a little bit, and we might see it roll over. But what do you think?
I would love to see it roll over for this reason. Let's just say the chart's going to be technical. So we have 1, 2, 3, 4, 5. Usually when we complete a fifth wave, if that high at 140 is the fifth wave top, then we're looking for some type of 1, 2, 3 wave correction. So to your point on the daily or weekly chart, we had a 3-day aggressive sell-off. Obviously, the market is trying to rip it up a little bit, and everyone got all excited because the Qs were up yesterday and the NASDAQ is up. But I would think that we're going to struggle to take out this high. Either we're going to go sideways for a moment, for crying out loud. It's like this stock has just gone up, 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 and barely pulled back. But this was significant. I mean, this took a long time to pull back in April, and it's like, boop, just shed 15, 16% in 3 days. So I would like to see a little bit more of this. I'd like to see high, low, lower, high, lower, low, offer up that type of discount, offer previous resistance becoming support, find a demand zone, find trend line support, find a good technical level to then be long. So if I'm waiting, which I am, I just have a bunch of options trade on NVIDIA. I've obviously dollar cost averaging over the years. But what I'm really doing, if you're long the SPY, long the Qs, you're long NVIDIA. So you don't have to, triple down and say I'm long NVIDIA, even though it is really the biggest beneficiary or the big contributor to why the SPY and the Qs are up this year by a long shot. But if I had my pick, I'm just trying to get positioned down in here. So I do have some exposure on it. I'm doing some interesting trades where I'm trying to let my options decay quickly and just repeat every couple of Mondays every month, and just cycling through some NVIDIA put options. And so I just put on a trade for $2.40 credit that I'm going to try to pull about 30 to 50% profit out of the next 30 to 40 days. I will repeat that as needed. The positions I have in, if I go to NVIDIA here, this is just for a certain account or a specific account, so everybody has a similar exposure. I have a ratio spread. I have a volatility play out to August 2nd. I have a wide credit spread. I've got some naked puts. So I am willing to own NVIDIA but the true price I want to own it is like under $90. If I'm going to own it, I want to own it at 90 if I can. Why 90? Well, if we came back to this previous high, right there is around $96. So
Yep.
if I can, essentially say that's where I want to buy it, I will start buying it at 100, but trying to lower my cost basis fairly aggressively. But let's just say that this is high volatility 140 to 117, and we go right back to test the highs at 140. Well, if that's the case, my little reverse iron condor that I have that's in the middle, if we go back and poke the highs, I get profit there. This week, Frank and I took this trade, I think last week at the end of it, Friday. I put on a trade that by Monday, Tuesday, this thing was already up from like a $6 or $7 debit. I was up like $1.50, $1.60 profit within like 2 days of trading. So I'm playing it both ways. In the short term, I'm playing it longer term. Like, just, I don't want to buy it right now. I'd like to see this thing correct. I know we just had a 10-for-1 split. Usually we should see a pullback. I'm shocked that we had a 10-for-1 split and the market ripped up $30 to $40, over the next couple of weeks. So look, NVIDIA at this point being, number 1, 2, or 3 in the world, largest market cap company. I mean, by the way, we've seen this big fluctuation. We shedded like $300 billion in market cap only to gain another $200 billion in the last couple of days. So it's all over the place. And if you're going to be in the top 1, 2, and 3, or the top 10 in the S&P 500, everyone's watching now. And so I do think that the numbers and the earnings really matter. Whenever we have the next earnings report, it should be somewhere out here. That's going to be August. So, I mean, maybe NVIDIA pauses. Maybe there's some tech money getting taken. If you saw some proof of that would be like FedEx today. FedEx had earnings. They were up a ton. It was way beyond the expectations. And the trades that I was looking at both paid out. And so FedEx and Nike and some other just other stuff instead of just NVIDIA and just tech. But I'd like to own it, man. I mean, I want to own it, but just not now. I'm sick of this thing going up as a person that wants to buy and get some value. But you got to I just trade options. That's it. I mean, if it works, great. If I take ownership, I'm trying to get ownership where I want it as opposed to chasing this thing.
I like it. Yeah, I'm the same way. When it comes to NVIDIA, I would like to be an owner. I would like to own some shares, but I'm not going to, I've done this for long enough to learn that, there are times where it seems like the market can't go down. And there are also times when it seems like the market can't go up. I remember in 2022, the agony of everything I would touch would turn red going, long.
That's
So
true.
there are
Yeah.
times where, we just have, if I zoom out on my trading career and I look at it and I say, well, you know what, does this sort of stuff stay like this forever? No, the answer is no. There will be a time where things change. Sure, if you're a trader, you trade what's in front of you. You take advantage of what you see right now. And right now, stocks are strong. The prospect of rate cuts is still on the way. And I think that overall story this year is still going to be a positive thing for stocks. And we've talked about this many times, that prospect of like, well, when things do start seeing rate cuts, could it be rockier than people think? I think so. So, that's a different time. That's a different trade, right?
Yeah. And what we talked about yesterday with the rate cut situation is, if the Fed cuts rates in September and the language or narrative is this is now the official cut cycle, and everyone thinks that every quarter Fed's going to cut another 25 basis points, I would say that probably puts in more of the historical, that's the top of the market. I mean, we talked about this. I think this is kind of expanding on that point. If we're going to see a very consistent Fed cut cycle, regardless of whether the softening economy, softening labor market, or if the Fed is okay, idiots, we will cut rates because we've been saying we're considering it, but now we're going to cut and then we'll wait for the next one. We're going to be data dependent for the next one. And it could be like the long awaited Fed data dependent. Maybe their next cut is not December. Maybe the next cut is not until like March of next year or middle of next year. I mean, if you go out, this is what I keep going back to. I wish this went out to December 2025. It's not quite there yet, but if we go to September 2025, the market's still only pricing in about 125 to 150 basis points of cuts through the next year and a half. That's not a lot of cuts, and I don't know if the Fed's going to be consistent about it or if something's going to break. But this will certainly help. I think in the US, this does help the consumer because right now, small business that is not really accustomed to high borrowing costs for the last 2 decades, this could be a good help for them. It certainly helps the housing market to bring mortgage prices down to maybe a low fives instead of high sixes or low sevens. If we get sub 30-year mortgages again in the U.S., I think that'd be great. You're going to see a lot of refinancing action going on. You're going to see some higher demand as opposed to this pause. There's a lot of demand with no supply, so prices are high. Affordability index, it's now it's stretching people like 30 to 40% of their gross income to afford the median home. So
Yeah.
I heard you and Kenzo talking about earlier. It is certainly out of reach for a lot of traders now, or traders, a lot of buyers now to buy a home that 3-4 years ago, the average mortgage was like $1,000, and now it's like $2,700. And I did the math on mine. Like I finance a house at 2.7%. If I had to buy a house right now at 7, the same house, my mortgage payment goes from $2,800 a month to like $7,200.
Yeah.
I mean,
It's crazy.
no thanks. Like that's crazy to think like that's how drastically different it is for a fixed expense every single month. And that, as you know, and if anybody budgets, fixed expenses, your house, your car, those two really right there. If you're overpaying for those things, that's a drag on you financially. So,
Yes.
I mean, that's why living with your means is important. And if you have equity, sit on it. And right now, it's not a bad spot to be just sitting. If you're in a house and you can afford it, stay in it. Right. It's interesting how, I don't know, you guys in Atlanta, but I mean, are you seeing more houses pop up for sale? Are you starting to see a little
Yes.
bit more inventory out there?
And Chris, I don't own a house. I currently still live in an apartment. My wife and I
Yeah,
just have been kind of camping out. I mean, part of it is also just because our crazy schedules. I'm not, home ownership is obviously a lot of work and time and stuff like
sure.
that. And it is something obviously that, like everyone else, I would, I want, and I could afford a house. I could go
Right.
buy a house and just pay the incredible prices right now. But to your point, we watch Zillow casually. We're not in a rush to buy a house, which is a good spot to be in. We're not like, baby on the way, need a house right now. We're not at that stage. So for us, it's kind of like we're watching Zillow. And as you just pointed out, things have started to creep onto Zillow. We pull up Zillow and it's more colorful than it used to be. There's more
Mhm.
stuff on the map. There's more things as time passes. And,
Yeah.
I think that's an indicator by itself of slowly what's happening. The unemployment rate, if it continues to trend higher, it's another thing that might trigger Fed to cut rates, but also houses to start selling.
Right. Very true. So, yeah, I mean, that's things that are going to be playing into the bigger picture. Back to the charts. I found something pretty cool that I'm doing this week in the background. Tasty Trade actually has a really good platform for back testing. So, a couple of strategies that I have been doing for a while, I'm trying to verify to see. Look, I've got about let's say 3 to 5 go-to strategies in my options accounts. And I want to show that if this is all I did for the last, let's say 15 years, what does it look like? I mean, I have a pretty good indication of what it's going to show. It's going to show profit, because if the market's up to all-time highs, I mean, unless you're trying to be a bear for 15 years, you're
Sure.
probably going to find a way to make some money. So I'm not really that concerned. It's more about like, if I get into the details of my strategy, the nice thing is I can be very mechanical about my approach. And so, for example, I talked about NVDA in some naked puts, cash secured puts. I do a lot of synthetic stuff now for the IRA accounts that I manage, so I can reduce the size of the buying power that's required. And so I am watching for some levels where, let me see what this account, just as an example. Just this morning, let me see what I did here. So SPY this morning, I'm going out and I'm doing basically leaps on some of these stocks that I really, really like, and leaps on the SPY, but I'm not looking to hold it for the full, 300 to 365 days. I'm looking to basically hold it for like 30 to 40 to 60 days.
Yeah.
And so I'm hitting certain profit targets, something that you can allocate the capital, take out that time premium, and then redeploy it. And so you have a little bit more frequency in this over the course of, let's say you do it every Monday or every couple of Mondays. It's probably going to generate 20%, 30% on your capital outlay, and the average return on capital is around like 7 to 8% per investment. And let's say you did this every couple of weeks, like, it just, again, time and market, is better than timing the market, and trades like this that are tried and true with indexes and stocks that ultimately are trying to go up. I know you and I both know that if something gets really ugly, we're going to have another bear market. We're going to have another pullback. We're going to have another nasty correction. But I wish if we can make this, public service announcement for all investors out there. Do you think, Nick, that for the next big bear market that it's going to be like it's different and it never comes back? Is the U.S. going to become Japan, where we have a 34-year drawdown?
I don't think so.
I don't think so.
I think, you certainly could have a cool down, but if you look at it from like a
Yep.
decade perspective, 2000, 2010, we saw a decade where there were not gains on the stock market.
Exactly. Yeah.
Then the 10 to the 20, we saw huge gains. And so far this decade seems to be a strong few years so far. I do think that you probably get some pullback in there, but the broader theme I think is still, continued growth for the U.S. And I would be surprised if we had something kind of break that takes us from the number one spot anytime near the future right now.
Sure. Let's talk gold for a second. Are you still just kind of holding tight? Are you
I'm
buying anything else? Or are you just waiting?
I have a trade on gold. I am close to
Okay.
getting stopped out on this one. If it does break support around 2,300, I'm going to
Mhm.
take a pause on it, take a loss on it, and
Okay.
relook at it. I still like gold and silver to the upside. I'm
Yep.
not, convinced that it's going much, much lower unless you get, from a fundamentals trigger for me. If we get something where we no longer are expecting rate cuts this year, if inflation comes in red hot, if labor data is not, if it slows to to kind of not moving down anymore, if you get strength in the economy and hot inflation, that story would tell me to pause on the gold idea. For me right now, I've got this 2,300 level marked up. If price breaks it, I'm going to go ahead and take a loss on this idea. I've had
Okay.
pretty good trades on gold this year. This one's not worked out very well, but if we bounce or we find support and I can stay in this trade, great. But if we
Yep.
don't, if I get stopped out, but then we still kind of see recovery, I'm still
Yeah.
very willing to buy gold.
For
I
sure.
just need to see a technical. Right now, technicals don't seem to be very good unless we bounce off this 2,300 level. That would be my my take on it. What are your thoughts?
Yeah, that makes sense. I mean, I think that for the better confirmation, this is a little bit more of a kind of a passive trend line, but certainly watching the 20, let's say 2275 level.
Hmm.
The last three out of 4 days have been down. But if we hold that level, like you said, I mean, I like that. If there's a bit of a fake out, like let's say the Bears, slam it back down here, but then we rip right back up, that could be
Hmm.
just a nasty little liquidity bump, and then we see this thing, come back up. I still think it's kind of sideways in a broadening pattern, some choppiness after having such a good run that we're just going to go sideways for a little bit more to kind of justify all-time highs. Now, you got to wonder too, like what would be the macro environment or the scenario to see gold break all-time highs again? I still think silver is better. I still think the technicals are better on silver, but also silver you can see is flirting with trendline support. It's starting to break the last 3 out of 4 days, selling down. If this is a bear trap where we come back in and then rip back above this trend line, I like that for my silver trade to get back up towards $35 or $36. That's XAG. Um, so technically, I still like silver slightly better. It's also way cheaper than gold, but you can obviously dollar cost average in and trade fractional gold if you want to. So anyway, I mean, something worth watching. Gold and silver is a nice little differentiator in the portfolio. It doesn't have to be anything that's highly correlated. But I'm going, with some dollar strength for right now in some of the currency pairs in the dollar. I'm still long gold. I'm still long silver. Watching for big levels. Bitcoin, you had mentioned. You know,
Yep.
we're stabilizing here. I think as long as we hold this kind of 60 to 56K level, Bitcoin still looks pretty good to maintain some support. Ethereum has not sold off as aggressively, but same type of thing. I mean, we're coming back to fill this pocket. I would like to see. In fact, I have a futures position on it's a micro Ethereum futures position, 3175 and around 2,900, looking for some fills there, going out about 60 to 90 days if I get those levels filled at those prices. So anyway, I think Bitcoin, Ethereum still look good posture wise, and let's see if gold and silver make a run. But if the dollar is going to get stronger, that's going to put some pressure on everything I just mentioned. Ethereum will probably be sluggish,
Exactly.
Bitcoin sluggish, gold and silver both a little sluggish if the dollar is going to gain. But at some point, let's say that we can actually be way more convinced. And based on what you see right now in the DXY, Nick, are you bullish on the dollar? Is this enough for you to convince you to be long the dollar?
Well, I think for me, the breakout point, Chris, at that 106 level, 106.5, that to me is the trigger for if it's going to get me out of my gold trade if that happens. It's going to get me out of my silver long position.
Yep.
What's going to get us there is going to be probably what could get us there would be a hot PCE print, a hot CPI print, or a really hot jobs data print. Those are the things that would get the dollar to break out. If that happens, yeah, I think short term you have more upside to the dollar. Right now, where I'm at, I'm just a little too. It's just too choppy for me. I'd like to see a breakaway move to get bullish the dollar.
Yeah.
Or, like I said, if I want to see silver and gold push higher, I'd like to see these areas kind of reject and the dollar to weaken alongside the other currencies. But I also think, long story short, the dollar's also moving up because other central banks are cutting sooner. We talked about that at the
Sure.
beginning of the show with like the UK,
Yep.
it's Europe.
Yep.
So, yeah.
Yeah, and that's the same conversation we've had of if they're going to hold on to this pause cycle the longest, it's going to give the dollar a little bit more attractiveness. There's still some risk appetite. This is why I'm still long against the Swiss. I like the positive swap. The Swiss National Bank cut to 1.25. That's 2 cuts by a major central bank. European Central Bank cut. Bank of Canada cut. But oil prices have been, I think, helping the CAD a little bit. I'm still bullish on oil for now. I've got a crude oil futures trade in that as long as price stays above this little U-turn, CL is the feed there. So as long as price stays above 72.50, I'm good on that credit spread. Looking to stay long, even if it's choppy. I've at least put a line in the sand there at 72.50. So hopefully that pays out fairly well by just letting it do its thing for the next couple of months. And there's typically summer demand. We don't see a lot of bear markets in the summer for oil. But again, range wise, we've got highs up to 95, lows down to 65. And I think oil is kind of stuck in that range. I was looking at the oil price or the gas prices today at the pump. I'm out here in Utah, and I've seen about a 30 to 40 cent swing in the last couple of weeks. I looked at the AAA gas prices, and it shows like the last 30 days is only like a 3 to 4 cent different on national averages. So I don't know about, again, I just thought it was interesting. It's like, that's a big swing. Like 30, 40 cents is a big swing. That's a 10% swing at the pump. And I just look to see, is that transferring elsewhere with the national averages? And no, it's like a 3 to 5 cent change over the national average. So
It's interesting.
What's up with Utah? So these friggin'
Yeah, I
tankers
don't know.
out
You
here.
guys your gas must just be better than everywhere else there. So
Maybe
that's probably
it's that elevation, right? We got like that pure
you got to drive it up the hill.
mountain gas.
Yeah.
Oh
Well,
boy.
cool. Chris, I'm gonna leave the show to you for a few minutes. I think Frank is gonna join you for a little bit. Either
Okay.
way, you got the show for a little bit. Go through whatever you'd like to go through. And for everybody who's listening here with us live, Chris has his own social media accounts. You can find content from him at Real Chris Pulver on Twitter. And if you're watching on YouTube, we'll drop the link to his channel there where you can check him out. Chris, you got the show for a little bit, man.
All right. Thanks, Nick.
All right, man.
Have
See
the
ya.
rest of the day. Yep. Bye. All righty. Frank comes in, which would be a lot of fun as always. We can talk shop. I've got a couple of trades that I put in today. I was looking at some SPY. This gamma level stuck out like a sore thumb, and the contract sizes are pretty large. We're at 548 now. Today, as a Wednesday, seems to be not doing too much. It's already 10:45. I looked at an SPX trade this morning, and I wouldn't be surprised if this is already paying paying partial profits. Where was my trade here? So trade the SPX. I've got it posted here in my 0DTE tracker. So we were sitting at 54.55. I sold the 54.80, and I went 20 points out to make that a synthetic strangle, just because I'm not going to put pony up $100,000 in this trade or $500,000. That's insane. So I did a synthetic where I'm going to wide iron condor. If those of you know strategies, they're stupid names, but serious business. That's a shout out to Schlotsky's Deli, by the way. I don't know. Maybe that's not relevant at all. But I sold the 54.80 and then the 54.25 on the put side, and also went out 20 points. Oops. 54.05. So that was initially the profit's already been taken. So 275, 280 credit up front, trading for if we get down to 230 or lower, And I can sit and let this marinate for another, 15 to 30 minutes. And if it stays where it is, this is probably going to be right there, like trade's done. So right there, there's already a win. That's about 45 cents in the net win. And then I'll wait to see, that is sitting here at 10:46 a.m. So we have a 225 debit by 10:40 a.m. Eastern time. So that marks, I want to say 9 out of 10 trades in the last couple of weeks. So win, loss, win, 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 win. 1, 2, 3, 4, 5, 6, 7, 8 out of 9 trades the last week or two, 2 weeks rather. And it just seems like a pretty easy trade. Now, that's because the market's not super exciting for the first 60 to 90 minutes. If there's some chop and some noise, you can see that, if I centered it initially around 54.55, the price has gone up about 10 points. But now that enough time has passed to still let me hit my profit at that 15% take profit. So anyway, good trade in the morning for the SPX. I'm looking at the SPY. I was showing you my gamma level here, and I'm looking at this 548. Now I like this level. I don't see a lot of sizes here that are over 1500 or 1500 contract size or 2000 with open interest. So what I'm looking at is, if this is today, I could just take a 0 DT and pay next to nothing on this. But instead, I went out to Friday and I went out of the money. And so I have a 548 call for Friday. I paid 65 cents for it. And right now it should be up a little bit of bucks, not a ton, but let's find out. My 548 right here. I paid 64 cents, is up 74 cents. I mean, if we get a bullish move today up to 548, the nice thing is this is probably going to be worth $1.50 to $2 and change, and I'll turn this into a nice little profit. So for the intraday trade, I hope it gets to 548, but I didn't want to just put all the all the marbles into a 0 DTE. So I went out to Friday as the expiration. It's also end of month, end of quarter, and that just seems to be a gamma level that I'm noticing could be pretty significant. So let's take a look at the charts right here. Let me make sure I'm not just talking over Frank the whole time. I'm not. So let's go short term. Here's SPY. We're still red on the week. Okay, we're still red on the week. We are trading inside last week's high, last week's low. So if we're doing some chop right in here, okay, fine. Is the market capable of breaking higher, breaking lower? I don't know. Let's find out. So 548 is kind of right in the chop. We could get there, if we retest this week's high so far. But this, last week's low to the last week's high have not been breached. And I was wondering, what does happen by the end of the week, end of the quarter, if anything? Because one thing we do have, if we don't have any crazy volatility, we do have core PCE on Friday. Maybe that gets the markets a little bit more excited. Is perhaps we have a little bit of a lull because this week is the end of the quarter, but maybe not that exciting. Maybe there's no real catalyst. We only had 30 some companies reporting earnings. FedEx had a big one. Nike has earnings, I think, tomorrow after market. Let me go to where's my earnings here? So we have General Mills that came out this morning. We have Levi. We have BlackBerry aftermarket. Micron, which is a semiconductor. That I did look at some price action on Micron. I didn't like it. It only hit the expected earnings around 3 out of 10 times for the last 10 prints. That's not enough to convince me like it's going to do it. It could be a big miss, and it'd be great to be a seller. But if you are looking for some explosiveness, I mean, FedEx, for example, blew through the expected move. I was looking at a credit spread on FedEx where I was doing an in the money bull put spread at like 270, and it blew up to like 280. So it was way beyond that, which allows you to take some nice profit on that in the money credit spread. Your net profit's going to be like $1.50 to $2 if you took the trade with me. So anyway, Micron is in the semiconductor space. We've obviously seen NVIDIA pull back a little bit, but if it's starting to stabilize, maybe there's a big emphasis on like semiconductors and some type of earnings pop. We have Walgreens on Thursday. We have Nike on Thursday aftermarket. So again, only a light earnings calendar. Some of the notables here, but there's only like 30 some companies this week, and that kind of wraps things up for Q1 earnings. And then we will wait and see as we get into July when we kick off Q2 earnings. So we'll start with financials. We'll work our way into the Mag 7 or, all about NVIDIA, right? For better, for worse. But anyway, if we go into this week and we wrap up the month and the quarter that there's not a lot happening action-wise, next week is a holiday week. But a couple things to note, okay? Holiday, July 4th, markets are closed, U.S. holiday, but we do have non-farm payroll on the 5th. Non-farm payroll on the 5th is either going to be an absolute dud because it's during a holiday weekend, right? And people are just like, well, I'm off Friday, I'm taking off, I'm taking off Thursday, taking off Friday, have a long weekend, enjoy the long weekend. Or it's going to be one of those news announcements where something bigger happens because nobody's watching. Maybe the market's really thin volume wise. Those can be perfect cases for big movements when nobody's around. So I'm going to watch. I too want to have like a nice holiday weekend, and I would like to not have a bunch of trades expiring on Friday. So I probably won't, heavily position for a Friday move, but I will watch price. Even if I'm on my phone, I want to pay attention to see if anything wild and crazy happens in the currency land, for the dollar crosses, or if anything happens in the stock market, because there are, if I'm not mistaken, there are July 5th expirations. So, yep. I mean, we have a Wednesday, we have a Friday. So no Thursday trading, but Friday expiration. So we could see something interesting. But so far, this is a quiet week. From top to bottom on the SPY, we've only gone about $4.30. That's a quiet week when the average is around 10. Okay. So I am happy to take some requests. Any charts you'd like me to take a look at, I'm happy to review. I did a nice thorough Forex review this morning. Like I said, I still remain long against the Swiss. Somebody had mentioned dollar Swiss in the chat today. Dollar Swiss is a good looking trade for me. This is what I'm doing. I did buy a little dip around this 38% pullback around 88.80, and I'm looking for a potential next entry if we pull back into this like 50 to 61% zone. So this is area 1, area 2. I'm looking to add a lot more on the right-hand side of this trend line. I do see a really nice head and shoulders pattern, left shoulder, head to neckline, okay? And so what I'm waiting for is if we can start to see a pullback to a right shoulder. And maybe it's now. This can certainly be a right shoulder, but I'm going to be a little bit more patient because oftentimes these patterns, and Forex especially, come in with symmetry. So if this is my left shoulder, I look at this as probably the right shoulder. If I want to buy in this area, that's a good spot to line up a nice symmetrical pattern. And like I said, if I go low to high, I'm going to project that move based on a symmetrical measurement towards probably 96 or 97. That's going to be my big target for dollar Swiss. If we go up any further than that, 1.00 or parity is another big level as well. That could be a 5-wave move. So if this is wave 1, we're getting a correction for wave 2, looking for a push on wave 3. I try to make a lot of money on wave 3s if I can. I mean, I was in early. I was dollar cost averaging into this, kind of looking for a wave 1. We had a wave 1. There's some nice profits there, and then I'm looking to add. So just a little bit of technical analysis, good stuff. But dollar Swiss is a good looking trade. And again, measured move wise, I'm looking to get up towards 96 to 98 or all the way up to parity, ideally 1.00. So it's a good looking trade in my opinion. I see dollar CAD asking. So dollar CAD, I'm still long. The red line is where my stop loss is. I'm still holding long. If the dollar CAD continues to push, we can get a nice simple trend line break there. I'd obviously like to see there's kind of a morning star happening here on the daily chart. I would like to see something like this. We get into some bullish confirmation. We hold the support level. We start making a run back up towards these highs. I like taking profit here around this 139 to 140 level. If we have a 139 to 140 level, I can either take profit and then look to see if this thing breaks. We have open space. If we get above 140, if the dollar's greater than 140 against the CAD, there is room to run all the way to 145. So realistically, this could be a pretty big opportunity for the dollar CAD. I'm not going to say hate because I hate the yen, but I really have disliked the dollar CAD because it has been very, very slippery. The levels I want to buy at, it doesn't really test. The levels I want to sell at, it doesn't really test. It's just been a weird behavior. Now I have bought, in the last couple of years, I'm trying to think, this breakout here, that was a right or ascending triangle breakout. That was a nice run into establishing that, overbought condition at 140. But if we pull back here, it's like we've had a 2-year plus range, right? This is 2022. We're in a 2-year range. So right now, you got to respect the highs, but I'm still bullish off this low towards those highs. So we had a chance to buy this, which was a nice trade. We had a chance to sell this, which was a nice trade. Had a chance to buy this, which is a nice trade. But in between, a lot of garbage, right? A lot of garbage in between there. So I'm staying the course on dollar CAD, trying to get this thing slightly higher, testing levels, taking some profit around that 3,900 to 1.40. Then I'm looking to see, okay, let's say that we hit 140 and then we turn bearish. Well, that's fine. Look for a swing trade and then see if we trade back to the middle of the range. Maybe it comes all the way back down to stay in this 2-year range, right? But economically, we just saw the Bank of Japan or the Bank of Canada cut rates. Fundamentally, economically, the Canadian economy may be in a different state than the U.S. at this time. So I'm just throwing it out there. I mentioned this in my trading room. I mean, if we break above 140, I can't deny a potential run towards 145. Now that'd be an incredibly weak move for the CAD versus the dollar, and I don't really know if it's all CAD dollar driven or if this is going to be dollar driven. I'm not sure. But right now, I'm long dollar CAD, and I'm going to stay that way until price proves otherwise. I mean, if price comes back below, let's say 3,600, I might move my stop loss up tighter and just take the small loss. But if we come back up to 38 or higher, I'll probably just use this and start trailing up and eliminate some risk, trying to get that 139 to 140 profit target. Okay. What are the other ones I saw? New Zealand. Linda's asking, what is that? Is that New Zealand CAD? It's got to be New Zealand CAD. Yeah, New Zealand CAD, I still like long. A couple things on this one. Again, price pattern potential. If we have a left shoulder head to neckline, it's obviously taken a little bit more time to carve out a low here. So this could be a larger low with a higher low. Okay, I think that the potential trend line right there, I still like the structure. We're getting a pullback, but I'm looking for a trend line. Just kind of hold. New Zealand CAD pulls back, maybe finds a pocket or so, but I'm still looking for this level to hold and be a buy opportunity for New Zealand CAD to be bullish. Measure the move, this low to high, this low to high. We're looking for something around like 92. That's my measured move. So I like bullishness on this pair back to at least this high, which is 88, and measure that move to symmetry. You're talking about a push towards like 92 to 93. But I do like New Zealand CAD long. I'm in that trade as well. Okay. Dollar CAD we just did. CAD Swiss, I like CAD Swiss a lot. This is also one of my favorite technicals right now. It's responding a little bit better. Dollar Swiss might actually look cleaner than the CAD Swiss. I was really excited about the CAD Swiss when we started to make this run. I was buying in at equal lows. I was buying in at trendline breaks. I had a nice little chunk of profit on the CAD Swiss that's pulled back and essentially reset to zero. But I'm not done with this trade. Again, if this is a head and shoulders, left shoulder head to neckline, I know it's a little bit more angled than I'd like to see it, but it's still a valid setup. If this is a low to high swing and we're putting in a higher low, you can measure that move. But my profit target on the CAD Swiss is up here, 71 to 72. That's going to be my profit target. If this is wave one, this is a pullback wave two. If we're looking for a wave three, wave four, wave five, that should be enough to get there for me, right? So I'm waiting. I'm patient, but I do like the CAD Swiss long to stay with that trade. So I like CAD Swiss long, Linda. I like dollar CAD long and New Zealand CAD long for right now. That doesn't really mean that I'm bearish on the CAD, because another trade that I really like, it's not quite setting up yet, but this one is probably the closest of the CAD crosses for me. Euro CAD, if this goes a little bit lower, okay, I'd like to see this push a little bit lower, take out these previous levels, make a nice clean trendline break. Then I'm going to look for a swing trade. We get a pullback here, stop loss above, go for a swing trade, target that low. There could be some good reward to risk there, probably a 2-to-1 or better. And that's a good setup on the Euro CAD. Pound CAD, same type of thing. Pound CAD needs a little bit more confirmation, but we are selling off a little bit. I was looking to sell this thing at 78. Not quite there yet. We bought a breakout here. I grabbed about 40 or 50 pips. We had enough to get about 150 pips out of that trade. I got it a little bit early, but now that we're starting to turn the corner a little bit, I'm not quite convinced that this is the trade that I want just quite yet. But if this thing slides low enough and lower, takes out this low, I'm looking for the same type of thing. A swing trade. Look to get in, stop loss above, target this level. Look for a reward to risk ratio, maybe 2-to-1 or 3-to-1. So Euro CAD, Pound CAD are on my radar. I want to see a bit more confirmation to kind of confirm that the bears are taking control structure-wise, and we'll go from there. Okay, so I like those trades quite a bit. Euro Swiss asking from ZA, sure, Euro Swiss. Euro Swiss, similar. This one, I mean, pattern-wise to me, this is a good-looking trade. I know that we had a very violent pullback over the last month or so, which is okay. And I told traders, look, I'm not going to budge on my trade plan. I'm still bullish against the Swiss. I still like Euro Swiss long. We probably came back in just to test that wick. And now I want to see how how the bulls can prove that they're ready to sign up for another leg higher. Again, we broke all the structure right here. Came back to retest the backside of this trend line. Not a bad play. Just got to put in the bottom, right? So if we hold this level, I am looking to see, what I'd like to see is I want to see a bullish pattern in here. So anywhere now for the next like 30 days or so, watch price closely. I'm looking for a bullish pattern to emerge. So if we just go straight down and straight up, that's not really a bullish pattern. That's a V bottom. That's tough to trade and certainly tough to time. But I did have an entry right in that wick. I bought the Euro Swiss right there. And so far, that seems to be a pretty good entry. That's at least responding with price. Now, that's one entry. Let's say that price pulls back a little bit deeper. I'm prepared to take this for a double bottom and then not reposition. I'm going to maintain my core position, but add some more trades and see if this comes all the way back up to the highs again around 99. So in this summary, I like this structure. I'm looking to see if this is a swing, pullback, swing to get us up above parity, and then possibly a fifth wave move into these highs around 105 or 106. That's my final target on the dollar Swiss, 105, 106, right? If we get above parity on a swing for a wave 3, I'll probably take some profit on that. Okay. But again, I think I've got some good lineups on the technicals on the Swiss crosses. It's positive swap, unless you're trading the Swiss yen, which I'm not. But everything else against it is paying me every day to hold it. But that's my thoughts there on the dollar or the Euro Swiss. So we did CAD Swiss, dollar Swiss, Euro Swiss. I like the setup. US 30, sure. Interesting divergence on the US 30 versus the S&P, right? I still like the Dow. In all honesty, I still like the Dow overall. In fact, I'm going to look at something right now for the DIA. DIA. I'm going to go out 359 days, and let me see if I can go to a 10 delta and see what that price is. So I could do a 320 put. A 320 put on the DIA. A 320 put is way the fudge down here. We're talking about we'd have to come back below the low of 2023's correction, that September October low. That'd be where my trade is, in jeopardy, or I'd be willing to take assignment. All I'm looking to do here, let me see what that credit offers. It's only $1.30. That's way less than I thought. I was thinking I could get a little bit more for that. Maybe I could do something in the Qs. Let me try something here. I'm certainly a little more reluctant to go into the Qs just because it is a bit more volatile, but the premiums might be that much better. So the Ivy rank is 28.9. Qs Ivy rank 19.1. Let's go 359. Look at a 10 delta. I can go to 3. These numbers are weird. So I go out to June 20th of next year. Go out to a 10 delta move. You're looking at a 364.78 put. Buy power reduction is 3668, so about $3,700, but I can get 542 credit for this. 364 on the Qs. I mean, you're talking about that 2023 September correction. If we end up going sideways, that's going to be good for my trade. We go higher, that's good for my trade. We go down a little bit, it'll change. I'll be in a slight drawdown with that, but not a ton. But I'll watch this fluctuation and hopefully, I mean, look, a summer trade, probably for the next 30 to 60 days, I could suck out of this thing maybe, 20 to 30% profit. Let's say I do that. Well, if I'm collecting 543 up front and I get 20% out of that, I'm going to turn this into $120 in the next like 30 to 40 days. Okay. Somebody just got long US 30. Okay. So US 30, let's go back to that one. US 30, and you're long. Are you long with, are you trading futures? Or are you trading the CFD? So if I'm trading US 30, I'm usually trading like Dow futures, which would be this feed. This would be my M. I could go micro futures on the Dow. What is the symbol there? MYM is the micro E-mini Dow. So when I'm trading the US 30, I'm trading the Dow. I'm typically trading a futures trade for me as a US trader. If you trade US 30, you're probably a non-US trader. Yes? Yes, says carry trades on euro yen against the yen pairs overall paying well. Yeah, if you're long against the yen, the carry trade's great. The only scary thing is if there's intervention, if there's some event that is aggressive repricing, or there's tons of volatility that's unforeseen, the yens are very tricky in that respect. So look, I know that if you just got through the the intervention we had a month ago, whenever that was, I mean, you're fine. You're back up to those highs again, and all is well, right? So yeah, the carry trade is alive and well. It's not unraveling yet, but I'm choosing technically to be participating in the Swiss as a carry trade as opposed to the yen. The Swiss has cut rates 2 times. I like that. I'm happy that they did. It was a surprise. The forecast was 1.5, and they came in 1.25. So that was a nice little pleasant surprise, and I'm hoping that they stay that direction or stay a bit more dovish. Okay. All right. Sounds good. Overall, directionally, I mean, this is what I'm seeing on the US 30, similar to the Dow. We are making slightly higher lows. This could be setting up for some type of ascending wedge, and we do something like this. Stay choppy, stay choppy, stay choppy. But what would be nice to see would be a broad market lift and maybe a higher high. And the Dow stretches higher, the Q stretch higher. The broad market, look, I want to see the SPY and the Qs, okay, and the Dow and the Russell. A healthy bull market, and I know you can't read those hieroglyphics there, but all 4 major indexes in a healthy bull market should be going up. We shouldn't have this up and this up and this down and this flat, right? Healthy bull market is these are all up. Healthy bear market, if there is such a thing, which there is, when we have aggressive bear markets, everything is down. So it's nice to see that broadly speaking, everything goes up. So I see this potential ascending wedge, right? We're up here, we're having equal highs, we're having higher lows. A lot of times this will coil. Okay. This is not a rising wedge. Rising wedge looks like this. Okay. Rising wedges basically get to the point where they can't go up any higher and then they break. An ascending wedge is resistance, 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 and it breaks resistance, and off we go. And you can measure those moves based on, fib swings and extensions. So if we go higher, I'd love it. And if somehow this one comes back down to lows, I still think it's an equal support level. So I think I'm going to go after some again, I'll probably do the DIA and the Qs, but the credits seem pretty darn good. And then same thing on the IWM. IWM is not terrible. It's a slightly higher IV rank. Let me see what I can go out for a year and maybe get a leap going. So I'm tying up some buying power, but not a ton. Maybe about 10% of the buying power allocated to some of these. I guess I can call it like a short-term leap. I know that's an oxymoron, but I'm going out in time, but I'm using time quickly in my favor to then take my profit targets. Okay, so I'll have some more information on that. I will be, working in the background on doing some of these tests and showing some basic strategies that I do and how consistently profitable they are over time. And if that's of interest to you, then come back in and tune into a session when I'm on, and we'll talk about it. Okay, Aussie Swiss. Sure thing. Aussie Swiss at 59.65. It's made a nice little U-turn on this trend line break. I've been looking to buy the Aussie Swiss based on equal lows. I'm long the Aussie Swiss. I had a pullback into this area, so I did get filled on that wick. We had some fresh highs. I since had a pullback. I have a couple robots running as well that are devoted to just buying against the Swiss. So if we have another decent trend coming, my robot should also be cleaning up, doing pretty well. What I like about this recent move is we just poked out that high, and we're on the right-hand side of the trend line. So I still like Aussie Swiss. I'm still going for higher highs. And where to? I'm looking left on this chart. Okay, looking left on this chart. And 2 levels that kind of stand out. All the way back here, look at all the structure around this 6,400 zone. That to me is a big profit zone of liquidity. Okay, the next one would be if we get back to this level, support, nearly resistance right around 62. So I'd say between 62 and 64, that to me is a nice, safe profit window. That's another, 250 pips away. Or if you get to 64, you're talking almost 400 pips. So again, I like the upside. I like this just steady carry trade plus some technicals. And this has been, and by the way, this Swiss stuff didn't just come up out of nowhere. Like I have been long against the Swiss since the turn of 2023. Because as soon as I noticed that brokers were finally providing positive swap, I started averaging into Swiss crosses. So I've been in this trade for a while, right? A year and a half into it, what do I have to show for it? I mean, I've got about 4,000 or 5,000 pips that I'm sitting on right now, profit, which is cool. But I'm also sitting on about I don't know, trying to think, almost 8% swap on some of my positions. So from my account size that I was using, about 8% of that is swap positive, which pads my bottom line. I can afford to sit in these trades because it doesn't cost me anything. In fact, it actually pays me. Okay. So anyway, food for thought. Okay, it's just after 11 o'clock. I'm going to run to my trading room here in a few minutes. I do want to put a position on the Qs, most likely in the DIA. I might put on, I don't know, I might look at the futures market actually and see maybe yeah, I'll compare the difference. But the difference would be if I did a DIA versus a QQQ, I can take shares of that. I'm not going to take shares in the futures market. But I want to see what I get credit wise. It's, it's not looking at a long-term hold. I think now's a pretty good window that if I'm generating income or collecting premiums on sell options, I'm only looking for like 30 to 60 day cycles to take profit. So if I can get a 10, 15, 20+% profit target, I'm okay with that. I just redeploy it. So anyway, like I said, I'll do some back testing on my end. I'll just show like, look, these are the core strategies I run. Here's how they do over time. And I think going back to like, 2011, 2012, 2015, 16, when the market sideways, 2019, when we had a pullback, or 2018 at that aggressive dip at the end of the year, strategies that have experienced drawdowns, right? So it's not perfect. There's going to be some nice like bear markets and bear moves where it's not just the stock market goes up all the time. But like I said earlier, time in the market is better than timing the market. That's hard. Timing the market's hard. Pound dollar just fell. How hard? For the day, I mean, it's down on the day, but that's because we have the dollar up, right? Currency strength wise, dollar's up. Aussies faded off that CPI news this morning. Dollar's up. Everything else is down. I mean, I'm fine with that. Look, the dollar has finally proven a little bit more so than the last couple of weeks. Like, the dollar is proving that it's getting some love. I said 105.60. It was choppy, choppy, choppy. We're making a nice, clean, kind of definitive break above it. If the daily closes above, which looks like today's a good indication, and the weekly candle closes above, I'm long the dollar. Doesn't mean I'm long on every individual currency pair, though, because some of them just don't look good. Pound dollar still choppy to me. Aussie dollar still choppy to me. But I'm short the euro dollar. I'm short the New Zealand dollar. I'm long the dollar CAD, long the dollar Swiss, not trading the dollar yen. Okay. So that'll wrap it up for my little portion today. Thanks for being with us as always. Nick and the team, A1 Trading, you guys always do an awesome job. Kenzo, any other guests that came on today or this week? It's a great session to tune into. So keep tuning in, like and subscribe, all the good stuff. It helps out everybody and everything. And if you want to join my channel, great. My channel is youtube.com/Chris Pulver. My Discord, if you leave me a comment on any video on my session, just ask me to join my Discord channel. I'll post a link to you and reply. So my server in Discord is Chris Pulver Trading. But anyway, that's it. Thanks a lot, everybody. I'll see you soon, and see you guys later this week. Bye.